Good afternoon, everyone. It's been a bit of a while since we had our last update, but thought I'd just do one right now. The action's been a bit better for sure coming towards the end of this month, especially as uncertainty is now in the market regarding how long the Fed will continue its pace of asset purchases and whether there'll be some tapering anytime soon. And just to illustrate the shift in market sentiment to what it was at the beginning of this month, I'm just going to pull up a chart of the Bund, and I'm just going to scroll back to here, which was on the 2nd of May, Thursday, and we traded 147.20 in the Bund. And then since then, we have pretty much come off 350 ticks, and now we're trading mid 143.63 precisely right now. This has been buoyed by a slightly better non-farm payroll number, generally better data coming out of the US, better company results from earnings as well, and just generally the whole picture in general has been getting slightly better. Initial claims has been trending lower. So as you can see, the Bund, after that high, and this is the non-farm payroll move on the 3rd, we actually moved over 80-90 ticks on that number over there. So it was a pretty big number, even though we didn't beat by that much. But I think there was a big expectation for quite a bad number at that time, and it surprised to the upside. So we actually had a move down over here. Then we consolidated, we moved down, consolidated for the middle of the month, which I think was the most difficult time to trade because there's pretty much no action anywhere. There was very low volatility, and then we now have been slowly coming down in this downward channel, as you can see over here, and we're just bouncing off nicely. And just recently we sort of broke above that channel, and but then now we've come back into it, and now we're testing this upper range of the channel right now. So looking at this, I think it has been a pretty big move, and where we go from here, well, technically we could still push back down and get towards the low 142s, or we can start pushing back up to this 144.15 and 144.53, which are the next levels that I've got pointed up, and then for a sort of longer term target of 144.98, which seems to be a pretty good resistance point over the past month. Now, a lot of this will now depend on murmurings out of the central bank officials, as well as what happens next week in the ECB rate meeting, and obviously the data that is coming out. Both the central banks have made it clear that their policy actions are going to be heavily dependent on what data comes out. So in terms of European data, they said the prospect of negative rates is going to depend on the data coming forward. So pretty much all European data is moving the markets quite a bit, depending on whether it comes good or bad. So today we actually had very good Chicago PMI numbers out of the US, which has now pushed up these markets again. So it's going to be very dependent on the data that's coming out, central bank comments, and that should sort of pave the way for which way we're going to head. But either way, the whole thought that we're now looking at getting away from this easing bias is just helping the market volatility return and helps us day traders quite a bit more. So I'm going to just show the Euribors, and you can see the shift in sentiment in the Euribors. And looking at this one here, this spread is the DEC 14 March 15 spread. No, sorry, the SEP 14 March 15 spread. Now, if I go mid-month, you can sort of see that we were just trading in this sort of narrow range between 3.5 and 4.5. Then we went up slightly to 5.5, and we're just trading in this range pretty much the whole month. And even though it looks like it was quite nice, but the actual volume on the Euribors were about 40,000 lots per day. Now if I bring up a contract, as you can see, this June 14 today has traded 144,934 lots. So it's almost triple, in fact more than triple what we were trading earlier in the month. So this volatility and generally the range definitely helped a lot with the whole trading aspect of it. And you can see this as we have steepened in the curve as we go forward. So we'd been trading for much of the range, much of the month in this range, and 5.5 was the top. And then since last week Friday, we sort of broke out of that, and we traded all the way up to 8. So it's a pretty big move for considering we were in a 1.5 tick range, and we broke out by 2.5 ticks. And obviously I was short at 5.5, but I just kept on averaging my way up every time it went up, and then I sort of managed to get out at 7s and 6.5s to sort of get out of that initial trade. But you know, there's been quite a bit of opportunity in this area here. There's been a lot more volume, and just in general it's been a lot more easier to trade. And I show it on another Euribor month as well, which is the March 15, June 15, and no, sorry, June 15, Sep 15. Similar story here. We're trading earlier in the month in this range between 5 and 6.5s. No, we're actually trading from April, 12th of April to the beginning of May to this sort of range, and then lately from last week again we broke out, and we broke out all the way up to 9s, and there was also some 9.5s that were available earlier on this week as well. So they've all broken out to the upside, but again it's put it more in an easier range to trade. It's a lot more volume, like I said, so it's been a lot more easier to trade. You know, my whole bias still is shorting this, because I can't see how the ECB is going to raise rates anytime soon. But while it keeps on going up, it gives me more of an opportunity to short, and I'll continue to average while it keeps on going up. And just looking elsewhere, just going to have a quick look at what the equity markets are doing. And this is the whole run up we had. This was earlier on in the month on the non-farm payroll. And as you can see, we sort of pushed up 140 points on that number. And since then, we've just been in an upward rise for much of the month. And we actually moved from 1470, about 14,700 all the way up to 15,500. So that's an 800 point move. That's a 5% rise we had just this month alone, up until the middle of last week. But then since the whole murmurings came regarding the Fed, we've sort of come off, and now we've sort of consolidated in this sideways range. And so, you know, I expect that we're just going to continue playing this range, because anytime we get towards these levels, there's a lot of support and resistance around this area. When we get around here, I think the market is just assuming we're just too overextended, and when we get down here, the market is basically using it as a buy the dip mentality, unless anything really changes. But I expect us to now stay within this range until something really pushes us out one way or the other. But yeah, so looking next week is the busiest week of the month. As usual, we've got non-farm payrolls, we've got the ECB meeting, we've got Bank of England. So hopefully there will be a lot of trading activity to be done, and hopefully profitable week for everyone. Till next time, good luck with your trading.